Imagine you're standing at the edge of a cliff, looking out over a breathtaking view. The horizon stretches out in front of you, and you're filled with excitement at the possibilities. But you're also aware of the drop at your feet. That mix of exhilaration and caution, that's what managing risk in investing feels like. It's about looking at the vast landscape of potential opportunities while keeping an eye on the edge to make sure you don't tumble off. Today, we're diving into the basics of risk management, a topic that's both thrilling and crucial for anyone interested in preserving and growing their wealth. Now, let me tell you a story about my friend Emily. Emily was an enthusiastic investor who, like many of us, was drawn into the world of trading with visions of quick success. She started with a hot tip she got at a party, a biotech stock that was supposedly about to soar. Fueled by excitement and the fear of missing out, she plowed her savings into this single stock. But as it happens, the company faced unexpected regulatory challenges, and the stock plummeted. For Emily, this was a tough lesson in risk management. You see, when it comes to investing, risk is like salt. You need just the right amount to make the dish flavorful, but too much ruins everything. Managing risk is about finding that balance. It's about protecting yourself from losses that you can't afford while still having enough skin in the game to enjoy the potential rewards. Let's break risk management down to its core. It starts with understanding yourself and your goals. Are you investing for retirement decades away, or are you saving to buy a house in a couple of years? Your timeline directly influences how much risk you can take on. Think of your financial goal as a destination on a road trip. If you have a long journey ahead, you might be comfortable taking a few detours and scenic routes. But if your destination is just around the corner, you stick to the main road, steady and predictable. One of the best mental models for risk management is the idea of diversification. It's like not putting all your eggs in one basket. By spreading your investments across different asset classes, industries, or geographical regions, you minimize the impact of any single investment going bad. It's a foundational concept akin to assembling a balanced diet. A plate filled with only one type of food might be appealing at first, but over time it lacks the nutrients your body needs to thrive. And then there's the emotional side of investing, which I think is often underestimated. Our instincts can lead us astray, driven by the twin forces of fear and greed. Greed tempts us to chase after what's hot, often long after the real opportunity has passed. Fear, on the other hand, makes us sell in a panic during a market downturn. The key is to acknowledge these emotions without letting them control you. A calm mind in turbulent times is one of the most valuable assets an investor can have. Risk management also involves setting practical rules for yourself, like stop-loss orders, which automatically sell stocks when they fall to a certain price. It's a way to take the emotion out of decision-making. Think of it as setting boundaries in a relationship. It's about protecting yourself from situations you know could cause trouble. We should also talk about the importance of continuous learning. The financial world is constantly evolving, and staying informed helps you make better decisions. But remember, information overload can lead to analysis paralysis. So, focus on understanding the fundamentals and developing a strategy that fits your personal risk tolerance. Long-term wealth comes from steady growth, not from trying to hit a jackpot with one big bet. Think of it like planting a garden. You plant seeds, nurture them, and give them time to grow. Some might bloom sooner than others, but over time, with care and attention, you'll have a thriving garden. Patience and discipline are the water and sunlight of investing. In closing, managing risk isn't about avoiding it altogether. That's neither possible nor practical. It's about understanding it, respecting it, and using it to your advantage. It's about knowing that every investment involves a leap of faith and preparing yourself to land on solid ground no matter where you jump. Reflect on what that means for your financial journey, and remember that being a thoughtful, disciplined investor is a lifelong endeavor. Just like watching a horizon from a cliff, it's about balancing awareness with action to enjoy the view without fear.